10, 20 years from now, you're sitting on a couple mil in there and you split it up with the family tax free, all sorts of options. We've been doing it for years and teaching it. That's level one. Now, he said, we need to get rid of taxation. No taxes, zero tax. Okay, is that going to happen in any reasonable universe? No.
You are entering lifestyle dentist territory where healthy, wealthy, generous dentists choose to live epic lives on their terms with freedom and fulfillment. I'm your host, Dr. Garth Hatch. Buckle up for another exciting episode.
Hello, and super excited for this episode of Lifestyle Dentist. We have the one and only Mark J. Kohler, tax expert, legal tax attorney, and just all around amazing guy. So glad to have you, Mark. How are you doing today?
Oh, thanks for having me. I'm casting a big net, so I know it's hard to sometimes introduce this guy, author, podcaster, what the hell is it? Hey, no, I'm trying to be the GOAT in the tax and legal industry for small businesses in America. And dentists, you're a Main Street professional. You're a mainstay. We got our accountants, our lawyers, our doctors, our dentists, the mortgage officer, the banker. We're these 10 core professionals on Main Street, and we got to be on the same page. And so,
I agree.
Yeah, it's kind of funny. We've launched Main Street Professionals, a training platform that is just focused on the tax piece, the accountants on Main Street, but it's going to be expanding. So it's exciting.
That's awesome. Well, we should chat on that, offline too, because I know you've already done a lot with several of the mastermind members, including me. Jerem was awesome.
He's a great guy.
Build my trifecta and everything else. I know a lot of other people from the mastermind, from the Cabo mastermind, from our last Cabo mastermind, said that you were by far their favorite speaker. So thanks for bringing the heat.
Thank you. I appreciate it.
Hey, well, I know we're on a tight schedule and you got a lot going on, so we could just start rolling right off the bat. Trifecta. I know you talk a lot about the trifecta. What is the trifecta, and how can a Main Street dentist implement a good trifecta?
You bet. That's something we trademarked in the last 5-10 years, and it was my flux capacitor moment. If you're a Back to the Future fan, Doc, yes. Discovered this falling off the toilet. I don't know, but there was no bathroom experience for me on the trifecta, but definitely a capacitor moment, because I had this come to me when I was teaching a conference years ago, where I was trying to bring together what our tax, legal, and business life, our dream, our journey should look like, and make sense of it. Because so many accountants struggle with this. You dentists know this. I mean, you're always trying to explain technical things going on with our mouth, and you have to dumb it down, for us lay people. And as an accountant, that's what I've really tried to teach other accountants to do, is create that visual picture that makes it easy. And it can be so simple that it's elaborate. It just opens up these windows in our mind for what we see our future can look like. So this trifecta is that representation of our future American dream, with all of these pieces brought together: tax, legal, insurance, money, investments, retirement, and our legacy, our trust. So the base of it is your family trust, your legacy. I argue the foundation should be a revocable living trust that can become irrevocable upon the one or two deaths of husband and wife. And so it can look very different based on your family makeup. But that revocable living trust is the foundation. It's not there for some crazy asset protection, own nothing, control everything crap that you poor dentists are pitched all the time. It's a basic revocable living trust, for crying out loud. Avoid probate, have a plan for your kids, a business continuation component. It coordinates with your ownership of your home, your life insurance beneficiary, your investment accounts, 401ks, IRA. Everything flows down into this. And that's the foundation. Then we take a line right up the middle and cut the paper in half. And on the left is the operation side, the ordinary income side. This is the S corporation, which many, many, many of you are, as Main Street professionals, are going to rely on, which I do. It's an incredible entity. It's not high risk. It's very versatile. and a great platform for any dentist, doctor, engineer, lawyer, accountant, architect. We love these. And that S Corp is that operational entity where you'll have your family board meeting. You'll employ children, employ spouse, maybe not yourself, how much, la, 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 la. Oh, so much planning opportunity. And that S Corp can also be the partner in a partnership, an operational partnership. Very common. We'll see anesthesiologists and lawyers and brokers and realtors all partner up into an LLC that allows for some combined marketing and combined operations. And that is the operational side. That's it. Doesn't own assets. Yeah. Doesn't, la, la, la. And then the right side, and I'll finish this off and then we can unpack it, Garth. Thanks for your patience. And then on the right side is our asset side, the passive income side. And I like to kind of divide that with a kind of a gray line in the middle, because on the kind of the A, B side, the A side of that right side is going to be our retirement accounts, HSAs, 401ks, Roths, and funding those retirement accounts to a degree, and then balancing it on the B side of that asset side with personal assets, rental properties, maybe a building we lease back to our S corporation, short-term rentals, long-term rentals, and then the life insurance and the investment accounts and other pieces that enhance that entire asset side. It has to work in concert. We don't just work in a silo and go life insurance, or work in a silo and go real estate or Roth IRAs. We do it all in a concert, and it's just magical. And then all of that flows down to the center in the legacy at the bottom. All the water flows downhill from the operation side, and it just functions like it should. And it's built how the tax code was meant to be built. So it's just a visual representation of the tax and legal experience so many people have.
Yeah, no, it's amazing. I did a deep dive with one of your attorneys, Jerem, and he was awesome. It was one, and I've worked with several really good CPAs and tax attorneys and did probably something similar that you're talking about. Where I did a revocable and irrevocable trust, and we've got the Nevada LLC and a Wyoming LLC, and it's kind of like a big spider web. But Jerem was helping to bring a lot of clarity and simplifying in some ways and making it better in all ways. So yeah, so it was really, really helpful.
Yeah, I think when you have a chance as a professional to sit down and have someone from the outside build that trifecta for you. I can walk all of you through. This is how you build it. And I do. I have a planner. I want everybody to carry it around with them and have it on your laptop, revisit it a couple times a year, every year. But when you have a tax and legal architect, if you will, that's doing this every day, you're not paying for our hour. You're paying for the last 10,000 hours, because we've seen it all. We've seen everybody, the train wrecks, the successes, the failures, the good, the bad, the ugly. And so what we're bringing to bear is going, okay, what's your plan? Okay, this is what your trifecta looks like really now. Let's tidy it up, clean it up, make sure your entities are tight. And then let's help you get to that next level. And while you're scaling or not, retiring, we may be exiting versus scaling. Well, we see it, and we can be looking at the forest from the outside, because you're in the trees, just not, knocking yourself out, working hard. And so that consult is really, really important. And we don't sell it with a $10,000 or $20,000 package of this crap or another. Please look out for that, folks. If I could be anything as a consumer advocate for it, we don't charge more,
especially
than
as dentists. Yeah, they're always getting screwed.
Yeah, so important.
Hey, just offhand, as far as with a tax attorney versus a tax CPA, would you compare that to like a psychiatrist versus a counseling with a master's degree, or what are the main differences between a tax attorney and a tax CPA?
That's a great question. What comes to mind just off the cuff here, it's like your MD and your surgeon. It's like your MD and your physical therapist. They work together. There's not one or the other. You need both. And so the attorney, the tax attorney, is that at least once a year, how's it going? Let's do a checkup. And I can dive deep. I've seen it all. I can do surgery if I have to. I mean, it's like the plastic surgeon. Many doctors know that the plastic surgeon is one of the most skilled doctors out there, because they have to know everything from exoskeleton to skin, that in every organ. They're one of the most well-rounded surgeons as a plastic surgeon. But the MD is the one that's like, okay, we're going to have our regular meetings. We're going to do checkups. We're going to get your blood work done. We're going to get your tax returns done. We're going to get your payroll done and make sure your bookkeeping's clean. But let's bring in that surgeon once a year and just make sure we're not missing anything. And then you're going to have big transactions. I'm going to go do this. I'm going to go run a marathon or whatever. Let's make sure, when am I ready to go here? Am I going to sell a body part? Whatever. So, you really want both working in concert, and it can be super affordable. And what happens is, regrettably, is we have the accountant that gets protective and territorial and tries to do it all and screws it up, or these shops that overcharge and try to do it all and aren't built for the day-to-day maintenance or the month-to-month or quarterly maintenance, and overcharge and screw it up. And it was never meant to be like that. I love my accountants. I love training my tax advisors, and they love relying on the law firm. We're a team, and it really is powerful when they're together.
That's awesome. That's awesome. One other thing you mentioned, and I get a ton of questions on this, is home office deductions. And this is something that I've done for years. And it's one where either dentists are like scared to death to even consider a home office because they might get audited, versus I'm going to write everything off at my house. What do you recommend as a good starting point and at least some guidelines for a home office? Average dentist, you've got your office, but you also have a home office that you do pay bills and other things like that from.
If you're cool with this, I mean,
yes,
we could
please.
kind of do superficial, here, but in our podcast, let's dive deep on this one. I want to take everybody to the next level in this. Okay.
Yes.
Let's do basic. Okay. There was a case about 10 years ago up in Connecticut. It was a beautiful case. This doctor wrote off his home office. And, the traditional rule, it has to be exclusively used as your office and your primary place of business. That was what was in the code in the good old days. Well, this doctor's like, okay, I have an office across town, which is my primary, but I have this home office, and yeah, I can dedicate this exclusive, but it's not my primary. So he had met half the test, wrote it off, got audited. Had a good accountant, good tax lawyer, went to tax court, went to district court with a written case that came out, and he won. And the court recognized that he was doing business at home. He had to go review charts. He had to do emails. He had to make phone calls with customers or patients. And they said, they came up with the term administrative office. And it was exclusive, and it wasn't his primary, but he met this administrative exception that was created through case law. And so without any new statute, so a brand new accountant or an old school accountant that's not familiar with this case, they look at the statute, the law, and there's no exception. But when you read case law and you're more educated and you're on the cutting edge, you're like, oh my gosh, we have this exception. And if you ever get an auditor, all I have to do is refer to that case and they walk away. Gone. And IRS agents don't know everything either, and they go after the low-hanging fruit. So the first point is the home office is alive and well. It's safe. You can have an office across town, and you can have a home office, and we're going to rely on this case with the administrative office exception. Now, we still need to make sure it's exclusive and da-da-da-da-da. Okay, that's level one. That's no-brainer. I can freaking write that off all day long. And you've got your square footage rule that you could take, the safe harbor, or you could do a percentage of the home as a total based on the square footage of this office. And then I can do a piece of rent or a piece of mortgage interest, a piece of HOA, a piece of utilities, blah, blah, blah. That's level one. Okay, now let's take it next level. Now that I have a home office, why do I want to do this? You're like, Mark, it's a couple grand. I run a $4,000, $3,000. Who the hell cares? I'm making $400,000 a year or more, or whatever. It's not going to move the needle. Oh yeah, but it opens up a variety of things. Next level. Now that you have a home office, every time I drive anywhere from the home, except the commute to the primary office doesn't count. But anything that I do leaving the home to go to Staples, the Apple store, on a trip, events, airport, anything, I get that write-off. So now I've just doubled down on mileage. Oh, and your spouse works in the business. Now we've got his or her mileage on top of this. Oh, and you've got teenage kids that are helping in the business. Boom, we got their mileage. So now I just doubled down and audit-proofed a ton of more auto deductions. Next level. Now with the home office, you don't have to be a billionaire to have a family office. Your family office is 3 doors down with a couch in it.
Mm-hmm.
And now we've got our board meeting. So now we have a family board. We've got the teenagers as well as the adult children, spouse on the board. Your spouse may not even take a W-2 to fund a 401k, which is a whole other topic, but he or she's going to be on the board because you have a home office. Now the kids working in the home are helping with the home office. So it bolsters any payments to children to fund their Roth IRAs and colleges. We just opened up a whole other route to go down a rabbit hole on because of the simple home office. All right, now we got the Augusta rule. Now we're going to like, hey, I might hold a class once in a while or a conference or a meeting with my employees at the home. And now that I have a home office, I can unlock the Augusta rule. This is based on Augusta, Georgia, where the IRS years ago said, hey, if you rent out your house for 2 weeks, you don't even have to report it. It's too much paperwork. It was part of the Paperwork Reduction Act. So just go ahead and pay fair market value rent to your corporation for the use of your home up to 14 days a year because you have a home office. We now unlock meetings at the home with staff, customers, patients, or employees, and even the family for structured board meetings at that level. So now I've just unlocked 14 days of fair market value. You go to Airbnb, VRBO, pull your fair market value rent for the day that you're going to hold your meeting. I just took a tax write-off in my S Corp, 0 reporting on my 1040. That could be 5, 10, 15K a year. Oh, next level. Now that I've got this home office and I'm doing the Augusta, the family office, paying kids, picking up auto, I'm writing off all this. I've got equipment because I'm going to need to write off computers, laptops, cameras, because I'm going to have a little YouTube studio. I'm going to be doing a YouTube studio in that home office. So
like
now
I'm at my home office. Yeah,
just like you right now. So now I've unlocked equipment write-offs with 179 or bonus depreciation. I've got the kids helping with social media, and it was a springboard for all that. And then we realize I should not be paying rent to whoever down the street that built my dental office. I'm going to build my own building. And you start to feel it and you start to catch the vision. So you go down to the Wells Fargo, you look at an SBA loan, built. They have a whole program built for professionals. I just got the 5th SBA loan approved 2 weeks ago. We're building a new building in Cedar City, Utah, 2 stories to house 60 employees. And we're renting it back to our LLC owned by our 2 S Corps. It's dash for election. I don't have to be a real estate professional. All of you have been sold that bill of goods. I can do a cost seg. Trump's going to bring back bonus depreciation this year with a vengeance. I'm going to unlock hundreds of thousands of dollars of bonus depreciation this year that are going to write off against my practice. And I don't even need to say the word real estate professional. That's awesome. All because I realized my accountant is dragging their knuckles into this century, doesn't even realize I can do a home office that unlocks this whole cascade of strategies that come from that little flower.
Yeah, that's awesome. The Augusta rule is near and dear to my heart. I actually lived in Augusta, Georgia when I was in the military, and we rented out our house this was back in 2005 to 7, rented out the house for $6,000 for the week during the Masters, took the family, the kids, everybody to Disney World and still made money.
Oh my God, tax-free.
Tax-free.
Crazy.
Yeah.
I love Augusta. That airport, it's so funny. Any time of the year you fly in, you're like, why do they have such a beautiful big airport and all this grass around their airport? Because when you're there for the Masters, it's like a corporate jet RV show. I mean, it's just like, I mean, I'm like, what? It's unbelievable. So I was a representative for TaxSlayer. And I think, if you lived in Augusta, TaxSlayer has a huge presence there, which is like the second best choice to TurboTax, the 800-pound gorilla, but they're based in Augusta. So I've been to Augusta for TaxSlayer events, and over the years, it's a beautiful town.
That's awesome. Hey, could I ask maybe a hair splitter with the home office on? I've heard you can have, if you have for your employees health equipment like a pool, a sauna for the home office for the employees to use. Is that valid? Is that not valid? Or how could you make it valid? I guess.
I may have never even heard of this. So, no. So what you're saying is the dentist is the homeowner.
Okay.
That's what you're saying, or the doctor, whatever.
Yes.
And they're going to have a swimming pool. You said the word swimming pool.
Mm-hmm.
That patients or who's going to use the pool and for what purpose?
Employees that employees could use.
So you're going to let employees come use the pool as a perk for their employment.
Yeah.
And so I need to be able to write off my pool as a perk for my employees. Oh my gosh.
Is that pushing it?
This just goes to prove that of all the industries I work for, the dentist gets sold the most harebrained strategies I have ever heard of. I'm not kidding. And there must be a class at university of, we're going to teach you to be the most aggressive in tax planning than any other medical professional in the community. I'm not kidding. It's so funny. Okay. Let's think through it. Well, first of all, could you charge your S Corp for the use of the pool by for the employees of the S Corp to come by the pool? For sure. Mm-hmm. Okay. So you charge the S Corp, it gets a write-off, because you got to think there's two sides of the equation. There's write-off and there's income.
Got it.
So could we write off the use of the pool? If it did not exceed 50% use, then you're not depreciating. That's what everybody wants. So now we got to say, okay, what's the cost of a gym membership for the use of a pool or a country club or whatever? So if I say 10 employees get to use my pool whenever the hell they want, or certain days of the week and times, anytime they want, they can come by. The cost of that in the marketplace, because you can't ramp this up. See, some harebrained person's already been trying to abuse this, but legitimately, okay, I go out of the fair market value of a country club pool membership. Let's say it's $100 an employee per month. I think that's excessive, but let's just say it's 100. Sure. So you got it, 10 employees, $100 a month, $1,000 to let the S Corp employees use my pool at home. All right. I could get my head around that. You got $1,000 write-off a month in the S Corp. Oh, but now you've got $1,000 on a Schedule E on your 1040. You got to pick up that income on your 1040. You can't just write it off over here and say, oh, but they're using my home. Okay, well, that's income to you over here. You have leased your pool to the S Corp for the use of those employees, just as if you were going to let my employees come over there and use it. So now, if you wanted to do it 14 days out of the year, okay. But if it's 14 pool parties with your employees and you're going to write that off rather than renting a facility, I'm okay with that. But if you're going to do more than 14 days, you've got to collect that and income and report it on your 1040. Oh, they cross each other out. You're back where you started.
That makes sense.
So I see the light. I see the concept. I don't know how practical it is, but it is true. I have employees that will throw a pool party in the summer, maybe a couple of them for their employees, and charge a fee to the S Corp for the use of their home, rather than going out and renting the Marriott pool and locking it down for $2,000 to $3,000. I get it. That's cool. But you got 14 days to play with that baby.
Okay. The Augusta rule would be the best way to tackle that, it sounds like.
Absolutely. Yeah. Okay.
No, that makes sense. That makes sense. I know you follow, we got Trump in office. You follow the political and economics scene. Get out Mark's crystal ball. Tariffs. Are they going to hurt the economy, help the economy? What's your thoughts on tariffs?
Well, I love it. I have a crystal ball here with me. So I just wanted to make sure all of you know.
Yeah, that you're official, man. You really do. I love that.
So, okay. Are tariffs going to hurt or help us? Let me look. Okay. Dear crystal ball. Is Elon going to bring us around to this? Is this going to be okay? Tariffs are going to help us. Bottom line, no doubt, it's a no-brainer. It is rhetoric from mainstream media, scared to death that they're again controlled by the deep state and all. And we're seeing this. It's no longer a conspiracy.
That's no, literally, Politico is being funded by
USAID.
USAID. Yeah, they just came out with that.
It is so clear. It's so wonderful. All these conspiracy theories 5-10 years ago that you were shunned for. Now, Elon yesterday shows up in the Oval Office and is like, yeah, I found another one. And the Democrats are just like, no. And you know what? The Democrats are coming over in droves. They're like, oh my gosh, I was duped. So anyway, I don't want to get too political, and I really don't. I care about tax legislation, whether it's Republican or democratically passed. Cool. Tariffs. I was at Davos in the World Economic Summit 3 weeks ago. I was there, and I got to speak at Davos representing small business owners in America and all over the world. 90% of the economy of of all countries on average is built on the backs of small business with less than 100 employees. Mm-hmm. That's the backbone of our country. I'm in Italy going to a pizza place with a mom and dad living their passion, passing that little pizza place onto their kids. Went down the street and there's a clothing store, third generation, selling leather jackets handmade by mom and the aunts down the street. Beautiful. And this is everywhere, not only in America, it's all over the world. And it's just beautiful. And when I was so with that said, I could talk about that whole experience. But at the World Economic Forum, I was sitting there with the foreign ambassador for the U.S. to Switzerland, having an incredible conversation. And he's like, we call it tariff terror. Tariff terrors, and you're being scared. And because countries that are upside down in the trade balance with the U.S., they're the ones freaking out. That's it. And they're trying to change with their misinformation and dissemination of information on social media and with media or through their channels. They're trying to freak out the U.S. into not upsetting that balance, and they're saying, well, it's going to increase the cost of goods in the U.S. Yeah, it will, because you are getting to sell your crap in the U.S., but you won't take our stuff into your country. And so the countries that are in imbalance, you're going to have to pay to bring your stuff to the U.S. But on the flip side, in Trump's new policy proposal last week, he said, I am going to give a tax break to any American-made product. He's going to drive down. So when you go to Walmart, the Chinese-made razor is going to be 3 times the cost of the U.S.-made razor that's now cheaper. And by the way, you're paying less tax because we just found all this inefficiency with Doge, and we got tariffs. So, guys, it's economics. We have a $3 trillion deficit in our country, and we've got to flip the switch and get that differential. And instead of us paying so many taxes to pay for this incredible debt, we're going to start being able to pay less in taxes by being efficient with our treasury, putting more money from tariffs into our treasury, and then we can pay the bills without it, and the tariffs are going to help make that happen. I know that I oversimplified world economics.
No, that's awesome. That's
the
super
concept's
helpful.
There.
Yeah. That makes a ton of sense. No, same crystal ball question, and I know no one knows, but as far as with the whole talk on the IRS or the ERS, if there's going to be any changes or do away with the IRS or just simplify the IRS, any word on the street from tax attorneys, tax CPAs, what you think might happen on that?
Absolutely. Does the IRS need to be more efficient? Internal revenue, for sure. There are several antiquated systems, not as bad as we saw with the federal pension system down in a mine in Pennsylvania.
The one elevator down a Pennsylvania mine.
Hell, no. But the IRS has been upgrading their software systems and for years. And I know with Doge, they're going to double down on that. The IRS is a machine that any machine could be more efficient. All of us could be more efficient in our lives, for sure. So the IRS needs that. Now, are we going to get rid of the IRS? No. See, you have to know if you're just recently on the bandwagon of MAGA, okay, you're still a little apprehensive because you're like, why the hell did Trump say that? We're going to buy Canada. We're going to buy green. Why did he say that? If you know Trump, this is his MO. He lobs a grenade way out there. He knows this. He said it. When you get into in individual interviews, if you go through all the morass of interviews, he'll say, I'll throw a grenade out there like, we're going to buy Greenland, when I know we can't or we won't. But what does it do? It starts a dialogue, and I get halfway there of what I really wanted. In negotiations, so many of us don't understand the art of negotiation. We go for what we think we can get, and then we settle for less. He throws us so far out there that we end up, they freak out, and we come back to where you would have never got anyway. And he's an advocate for you. You may not like his style. That's fine. I want a badass out there representing my country, representing me. Go kick ass with China, please. Don't send Kamala. Don't send me. I'd be terrible at it. So when you go into a lawsuit, and I'm a lawyer, when you go to, some of you out there, you're like, hey, if I'm going to go into a divorce or a civil action, I want what do? You call me. You do. And you go, Mark,
Yeah.
I want the freaking dirtiest, rotten SOB bulldog you know.
Yeah.
Okay. Because you want someone to advocate. You're not going to go golfing with them. You're not going to go out to dinner with them. You want the badass attorney because you know they're going to fight for you. And that's what you want.
Yes.
That's what we got with Trump. You don't want to go hang out with him. Maybe, I don't know. That's up to you. But we went for him because he sees the mess. He's willing to take the dive and clean up the swamp. He's willing to take the bullets, literally, and go fight for you. And if you don't have to love the guy, just love the quarterback on the field. You love the team.
Yep.
Just, he's your quarterback right now. Get behind him. It's going to be so thrilling. So back to IRS. He said, we need to get rid of taxation. No taxes, zero tax. Okay. Is that going to happen in any reasonable universe? No. But he freaks out the GOP so bad that now they're like, okay, maybe we can give him no tax on Social Security, no tax on tips, no tax on overtime, which will cost us billions of dollars. When you start not taxing that income, that's money that's not going in the treasury. We got to make up for that. So Elon is over there. Hey, I got a ledger, Mr. Trump, and we're almost there. So that you can afford to not tax Social Security. You can afford to not tax tips and overtime because we found so much savings over here. We can now afford to do that and give it back to the American public. That's the equation. And by the way, you locked down $500 billion in tariffs on China. Let's throw that in the pot. Okay, we got it. Bonus depreciation back, lower tax rates. We're not going to tax this. You can write off your auto more aggressive. Okay, American public, go make money, live your dream. And everybody's like, oh my gosh, it worked.
Yeah.
That's how tariffs works. And so IRS is going to get efficient, but we're going to have taxes.
Yeah.
And it's cool.
And that makes sense. I mean, I think end of the day, things have to be paid for. It's just, how is it going to be paid for? And yeah, I agree. As long as, I think most business owners, as long as it's fair, it's in the country's best interest, people are fine with it. It's just when you feel like you're getting screwed, literally and figuratively by an entity. So yeah, no, that makes sense. Good to hear. One question, I know we're running short on time, but as far as mega Roth IRA, mega 401k.
Yep.
Can you talk a little bit about that? And I know a lot of dentists aren't familiar with this. Like how could you benefit from a mega Roth IRA or mega 401k?
This is a class I'll teach. If you want to put together a mastermind group of your members that you'd like, we ought to carve out 45 minutes to an hour and really unpack it.
That'd be
but
awesome.
Here's the concept, everybody. First of all, it's very alive and well, not high risk, very common. And the principle is, I want to drive money into my retirement account as much as possible. Number two, I want it to be Roth money, which will grow tax-free and never come out and be taxed. And I want to get that amount in there and then go over here and play with my other money and do real estate, insurance, other investments. That's cool. But what's the cap? What can I really put in there? Oh, well, my accountant said I make too much money for a Roth IRA. And Roths aren't great, or you can't put that in a 401k because you have employees and they shut down because they're uneducated and you feel like there's nothing there. The reality is you can have a Roth IRA at any income level, even if you have a 401k, safe harbor or solo, and you, your spouse, and all of your children should be funding a Roth IRA every year. You go in through the back door, not the front door. There's a methodology for it. It's super easy. I've got videos on it. It's in my book. It's in my partner's book, Directed IRA. And we also want it in a Roth IRA you can self-direct so that you can go buy real estate with it. You can go buy crypto, do notes, and start pooling that money and even create an LLC and have a family LLC owned by all your Roth IRAs. And then every year, refill the tank with Roth contributions for everybody, fund up to the LLC, and that LLC starts to snowball tax-free. 10, 20 years from now, you're sitting on a couple mil in there and you split it up with the family tax-free, all sorts of options. We've been doing it for years, been teaching it. That's level one. Now, to get to this mega level or the mega backdoor Roth, we start stacking the Roth in conjunction with your 401k. Now, dentists and lawyers like me, we have employees. So doing a solo 401k can be a challenge. Now, I may have a separate line of business for my spouse, and he or she can dive deeper into the solo 401k and really mega out even further. But what I can do even with this safe harbor 401k is it can be Roth money. I still get a match, and then I've got to scale it back a little bit or it gets top heavy because I'm the owner, and we can't get it too heavy or it's going to fall over. So we have to make sure all the employees are participating to some degree, and based on their participation, I can mega it out a little bit further. Some of you work for a group, some of you are on W-2, some of you are retired, some of you are scaling up, some of you are a minority owner in your operation. So it's going to depend on your situation on how much we can stack into that Roth bucket, that mega backdoor Roth every year. But what we want to do is have clarity, understand the rules, know what our limits are, and freaking exploit them. Drop that money in. Boom. Spouse. Boom. Kids. Boom. What am I going to invest it in? And we have a plan, and we're off to the races. So that's the concept. Everybody's going to have a different amount that they can probably exploit based on their age as well, their business structure, and all those goodies. But it's an incredible strategy. I do it every year. We've been helping clients do it. We've lost count of our clients that have $10 million in their Roth IRA. Literally. We have our trust company now with over $2 billion of self-directed funds where clients put the money in and 2 days later deploy it in what the hell they want. That's it. We're not your investment advisor. We're just a portal for you to self-direct any retirement account you want. And if you're like, well, my safe harbor plan with Fidelity for my employees, they don't let me do that. Let's adopt a new plan. And when you talk about this with your Fidelity rep, they're going to say the sky is falling. I'm a heretic and should be strung up, and you can't do this. And they're wrong. It's not that you can't. They can't. Fidelity can't build you a mega backdoor Roth and let you self-direct it into what you know best, because they're a broker dealer buried in Wall Street, and you need to rip the cord off and say, you know what? I want to invest my money in what I know best and get 10, 15, 20, 25% ROI because I can manage my money better than you in an ETF getting 7% at best after all the fees they bury in there. Yeah. So that's the concept that just once it's unlocked, it blows your mind. And it's not a get rich quick scheme. It's a get rich slow scheme. And I love those.
Yeah. Well, and it just makes sense. It opens up. I heard a stat that's amazing that there's less than 1% of all the businesses in the US are on the stock exchange for if you want to purchase stocks or bonds. And so if you're investing like most of Main Street America, you're investing in less than 1% of all the assets out there that you could invest in, which seems crazy. So yeah, it does help open those doors to invest in a lot more assets.
Yeah. It's exciting. And so, there's just so much there. And I love your group. Thanks, Garth, for having me on.
Amazing. Thank you so much. And yeah, really, thanks for all the value. I know November 13th or the 16th, you've got something going on, but Matt, if we could even get you on for part of our Cabo Mastermind, that would be awesome. So thanks so much. And best wishes, Mark. Talk to you soon.
Talk to you soon.
All right. Take care. Wow. That was awesome. Hope you guys enjoyed that with Mark Kohler. He always brings the heat, adds a ton of value. Just as a follow-up, his website is kkoslawyers.com. If anybody's interested, they do a comprehensive review. It's roughly $3,000 to $5,000 just to kind of give you an idea what it costs, depending on how complex your business strategies and entities are, but very affordable for what they do. I did one similar with another CPA group back in, I think it was like 2014, roughly 10 years ago, and it was 3 times that. I think it was about $15,000. So very affordable for what they do. And they also have a network of CPAs. Mark Kohler, he doesn't do anything on his own. He's the podcast guy, he in the mastermind behind it, but he has a team of a network of both attorneys and CPAs that are trained in Mark Kohler style accounting and tax strategies. So if that's helpful, that'll be in the show notes, and hope you enjoyed it. Thanks so much. Bye-bye.